in terms of looking at the globe, that's where the growth really started to slow last year. And I think he's focused on whether and to what extent that it infects the U.S. And it will to some extent. I mean, exports are about 10% of the U.S. economy. Total trade's about 15%. So it's tough to avoid a slowdown going on over there. But one thing he did not say is that in the fourth quarter and in December after that last rate hike, they responded to the decline in markets, which is sort of their pseudo third mandate, is keeping financial stability somewhat in check, AKA looking at the stock market. Now, of course, he's not going to admit that, but that's something he did not say. But yeah, the U.S. economy growing less than 3% this year likely. The first quarter could be less than 1%. And he has no choice but to focus on growth overseas because it is a big part of the global economy.
He didn't mention the word trade or tariffs or any of that in the interview, though. Should he have? I mean, doesn't that have an interplay in what's going on with the U.S. and China and global growth in general?
Well, maybe that was his way by citing the slowdown in China and Europe as a roundabout way of saying, yeah, trade had an influence on this. You know, and the tariffs.
Right. And then, you know, Mr. Pelley asked him if 4% growth was totally out of the cards. And he said, he didn't say it wasn't, but he sort of said, you know, we could have it here and there. What are your thoughts on economic growth going forward? Because we're all wondering, is this the end of the bull run? I mean, this week marks sort of the 10-year anniversary.
Right. Well, as he said also in the interview, growth is the increase in the size of the labor force plus productivity equals your eventual GDP. So if productivity, let's just say, is running 1.5% and labor force is growing, let's just say, 0.5 to up to 1, that's where the 2.5% type GDP growth rate comes into. But also we have to see the Fed has obviously raised rates. There's also a lag effect to previous rate hikes. So their rate hikes are still filtering its way through the economy. They're still shrinking their balance sheet. So we have an economy that's trying to grow, but at the same time there's a monetary drag. And I think the end result will be a 2 handle on growth this year rather than basically the 3 that we saw in 2018.
I thought his comments were interesting when he talked about the labor force and he talked about different things that are impacting it. The skills gap is a pretty big deal. And then he also mentioned the opioid crisis and potentially losing a generation of workers. Anything new there or something that we need to pay more attention to than perhaps just looking at the mandate of inflation and economic growth?
Well, what made this recovery somewhat discouraging is that the 25 to 54-year-old demographic, which is really your core base of labor, the participation rate never really got back to where it was pre-crisis. And I think by bringing up the opioid crisis is trying to explain why this very important core part of the labor market really never participated to the same extent it did before the crisis. And again, I think that's why he brought that up. And we need these people back in order to generate faster economic growth.
Overall, what did you make of his interview?
I think it was somewhat of a non-event. I mean, he pretty much told us previous to this that they are on hold. But I think the problem is that the Fed funds rate is only 2.25, 2.5. And that if the U.S. economy can't handle a Fed funds rate faster than this, then there is an issue with growth here and there's an issue with growth overseas. And that has helped to explain that is because we're highly dependent on a low cost of money. You know, having rates so low for so long, we are very sensitive to an increase in rates. And I think in the fourth quarter of last year, proved how sensitive we are to slight changes in Fed policy.